Hello, everyone. This is Keith Martin from CAFII. The webinar will start in just a few moments. Welcome to today's webinar. This is Keith Martin from CAFII. We're just waiting for attendees to join. We should be ready to start in a few moments. Hello and welcome to CAFII's webinar. It's 11:02. We'll start in under 1 minute. Thank you. Well, good afternoon and welcome to CAFII's second webinar of 2026. My name is Keith Martin, and I am the Executive Director of the Canadian Association of Financial Institutions in Insurance, or CAFII. On behalf of myself and the CAFII Board of Directors, and my colleague and CAFII's Senior Research and Policy Analyst, Robyn Jennings, I'd like to thank you for joining our webinar today. CAFII is a not-for-profit association dedicated to the development of an open and flexible insurance marketplace. Our 14 members include the insurance arms of Canada's major banks and credit unions, along with their insurer partners that underwrite credit protection and travel insurance. Now, members of the audience, if you have any questions for the panelists during this webinar, please send them to us, the host, via Zoom's Q&A function, which you can find at the bottom of the Zoom screen, and we will pose them on your behalf. I will now turn it over to my colleague, Robyn Jennings, to introduce our guest speaker, Sonia Baxendale, President and CEO of the Global Risk Institute. Robyn, over to you.
Thanks, Keith. Hello, everyone. Thank you all for joining us today. It is my pleasure to introduce Sonia Baxendale, President and CEO of the Global Risk Institute. Welcome, Sonia, and thank you for spending the next hour with us. As the President and CEO, Sonia brings together leaders from industry, academia, and government to focus on emerging risk issues. Sonia has extensive experience as an executive and non-executive in the global financial service industry. She's an active corporate director who sits on the board of Laurentian Bank, Definity Financial Corp, and their Intermediate Capital Group, or ICG. Prior to joining the Global Risk Institute, Sonia held senior roles at CIBC, including Senior Executive Vice President and President of CIBC Retail Markets, where she led the retail and commercial banking and wealth management businesses. Prior to CIBC, she held various positions within American Express Canada and at Saatchi & Saatchi. Sonia is a graduate of the University of Toronto, where she was named the Victoria College Alum of Distinctions in 2017. She was named one of the top 100 most powerful women in Canada for 3 consecutive years and was inducted into the Top 100 Hall of Fame in 2010. In 2000, she was recognized as one of Canada's top 40 under 40. Just before we begin the webinar, I would also like to extend a special welcome to a number of VIP guests. In addition to many representatives from our 14 CAFII member companies and our 12 associates, which are key supplier companies to the bank assurance sector, we have VIP attendees today from allied industry associations such as the Canadian Life and Health Insurance Association, or CLHIA, the Travel and Health Insurance Association of Canada, or THIA, and as well from many insurance and financial service regulators and policymaking authorities, including regulators and policymakers from the following organizations: the Alberta Insurance Council, the Autorité des Marchés Financiers, or the AMF, the British Columbia Financial Services Authority, or BCFSA, the Government of BC, the BC Ministry of Finance, the Insurance Council of BC, the Canadian Bankers Association, or CBA, the Canadian Association of Direct Relationship Insurers, or CADRI, the Canadian Insurance Services Regulatory Organizations, or CISRO, the Financial Consumer Agency of Canada, or the FCAC, the Financial Services Regulatory Authority of Ontario, or FSRA, the Insurance Council of Manitoba, the Financial and Consumer Services of New Brunswick, the Ombuds Service for Life and Health Insurance, or OLHI, the Financial and Consumer Affairs Authority of Saskatchewan, and the Government of Saskatchewan. Now, let's begin our webinar. So, Sonia, thank you so much for joining me today. You've spoken recently with the Global Risk Institute about emergence of the new risk environment, one characterized by greater uncertainty, interconnectedness, and speed. Risks that once seemed relatively discrete are now influencing one another in ways that are often difficult to predict. So before we jump into our discussion today, I wanted to start with a few words from you on the Global Risk Institute and what you do. From your perspective, we'll start with that and then I'll ask my next question. I'm jumping ahead.
Thank you, Robyn, and thank you, Keith and Robyn, for the opportunity to speak here today. That's a rather intimidating long list of regulators and government officials, so really appreciate the opportunity. Many of your members and stakeholders would know GRI as well, but for those that don't, we were founded post the financial crisis. And interestingly enough, the founding individuals that really pushed for the Global Risk Institute was the then Governor of the Bank of Canada, Mark Carney, and the late Federal Minister of Finance, Jim Flaherty. So at the time, the purpose and the role for GRI was we had performed well as a financial sector through the financial crisis. And there was an objective to build risk capability and capacity with an intent of building Toronto and Ontario more generally as a center of excellence, and then expanding it out beyond the financial sector here. Since that time, we've grown from 13 members to 52 members today. That includes banks, insurance companies, many of your members, credit unions, pension funds, et cetera, and a number of Crown Corps. And I think that's one of the things that makes us somewhat unique, is that while there are very important associations that support subsets of the larger ecosystem, associations that we love to partner with, frankly, like yourselves, we cross the spectrum, and so the institutions learn ideas and gain insights from the other sectors within the financial industry, and then the combination of academia, government, and industry. So our work that we do is really the foundation of our work is our research, both internal and external. We partner with Columbia, Harvard, Rotman, many of the large academic institutions. And then building on that research, we do education, and we've really become known for our convening power, where we bring diverse viewpoints together, including our government and regulatory partners with industry on major issues and risks that are either emerging or we're facing, so that we can get to more informed decision making. So that's sort of the basis of what we do at GRI.
Great, thank you. That's, a lot. And you guys are working with great institutions, so it's very interesting. We'll start with a general question as well. So from your perspective, what is fundamentally different about the risk environment facing Canadian financial institutions today?
Yeah, it's a great question, because, when I reflect back on going back to when I was in an active executive role in a bank, and we would think about risk sort of pre the financial crisis, it was mostly financial risk. It was about market risk, liquidity risk, credit risk, those kinds of things. And then post the financial crisis, we really started thinking more about non-financial risks, operational risk, conduct, compliance, those sorts of things. And today, I would say what sort of characterizes the fundamental difference is, one, the complexity, the speed, and the interconnectedness of the risks. So we used to think about and be able to deal with risks quite discreetly. Even how we were structured inside organizations. You dealt with one of these risks and you could, kind of put together all the scenarios and the planning. Today, it's all about the interconnection of those risks. And at the current moment, I would say the top three risks that our members, and I think broadly we're focused on, are the economic uncertainty, so the macroeconomic factors, the geopolitical events, and technological change. And I think those three things are impacting broadly the risk environment in all of our financial institutions. We're operating in an environment where a geopolitical event can quickly trigger market volatility, supply chain disruption, cyber threats, reputational impacts, and policy responses. All of those will happen, almost instantaneously, and then they affect institutions across multiple jurisdictions. So I just think that the big factor is the links between those risks have become much more pronounced, and technology is playing an outsized role in how it is impacting those risks, both positively and negatively. Because, we like to think about, of course, we lead with the risk, but of course, the risk creates opportunities. So this role of technology as an amplifier is because I don't think it's a separate risk. Like, it's just not. We don't tend to think of it as a standalone risk. We tend to think of it more as an accelerator, and it's dealing with the speed, the spread of a risk, the impact, all those kinds of things. And probably the most obvious thing that's impacted all of us is in the cyberspace, and how cyber issues, they've been with us forever. But the impact and the speed and the breadth of them with the use of AI is dramatic, and I think continues to accelerate. So that's where I would leave that.
Yeah, and while you're talking, one of the things that struck me is, one of the realities of the environment that you just described is that institutions are essentially being asked to navigate increasing uncertainty, in their long-term strategic planning. So I guess could you talk a little bit more about what external forces you think are having the greatest influence on this strategic decision-making today, and I guess how organizations are adapting to this?
Yeah, so I think that's, really those, I would say right now, those are the main forces: the geopolitical uncertainty, the policy fragmentation, economic volatility, and if you blow that out a little bit, the affordability pressures, and the rapid technological change. And so I think sort of the key follow on to that is really, so what? So what do we do about that? How do we manage that? How do we think about it? Because all of that is sort of outside of our core operating control. We can't control the geopolitical events, we can't control the economic volatility, and we can't control the technological change. So I think the key then becomes us needing to evolve beyond traditional control frameworks. And so I know many on the line will have heard lots about operational resilience. And I think that's critical here, because it's not about being able to predict the next crisis or predict the next risk. It's about having broad preparedness and being able to have plans inside your organization that allow you to address things when they emerge and be prepared for them. Things like, scenario analysis and stress testing, never been more important in my view, but never been more difficult to do, because the factors, the implications, and really understanding the impacts and the mix, and is that much more difficult. Strategic foresight, And I think governance, we all are hearing more about the importance of governance. And to me, the governance aspect is partially about preparedness, ensuring that we're strategically prepared, operationally prepared, and have the processes in place. And then I guess the other thing I would say, given that these are so many external forces that are coming at us, is the ability to be adaptable, to pivot, to deal with situations as they come. So you can't sit around and say, okay, well, let's prepare for this single event. It's about building the organization that can be effective with a wide range of outcomes. And I think that those that are most successful are those that can adapt quickly to changes in the environment and make informed decisions despite the uncertainty.
Yeah, that makes so much sense. It just speaks to the connectedness of the growing interconnectedness of the world too, that organizations, we can't just be reactive. You have to be almost predictive. Could you speak a little bit more about what will distinguish in the next 5, 10 years, however many, what will distinguish organizations that are responding well versus ones that are actually, in fact, just reacting? Because I'd be
Yeah.
curious to see, I think more and more organizations are, in fact, trying to get the controls in place, but are there certain things specifically that you're like, this will show who's coming out ahead?
Yeah, yeah. So I think that's a great question. And it is about reacting versus being prepared. And so to me, the most important thing is that we not spend our time predicting what's going to come next. Because I think that's a bit of a mug's game. Like you just can't predict what it's going to be. And so I think that the strongest organizations are those that recognize that these external risks, they can't be prevented and they can't be controlled by you in your institution. There's many other mechanisms that are trying to prevent and control them. So it's about instead of trying to eliminate the uncertainty, it's the focus on building resilience, building flexibility, and building decision-making capability. And I think the common characteristics is strong governance and clear accountability. The accountability part, I think, is really, really critical because that relates to decision making. And I think it increasingly, in a world of technology and AI, it's increasingly important that we be absolutely clear on who is accountable for what and where those decisions lie. I think, maybe some of your members will be familiar with the work that OSFI is doing on senior manager accountability. And if there are operations outside of Canada, will have worked within that kind of environment. Not that I'm not necessarily proposing anything or making a statement about that, other than I think that is that senior manager accountability is driven by an acknowledgement by the regulators that we need to have clearer lines of accountability in organizations in terms of who is actually making decisions. And in my mind, that becomes even more important in an era of growing technology, that we need to be clear-eyed about how things get done. I think the other key is organizations that are really doing a good job with scenario analysis. And that means to do a good job, you've got to think out of the box. You've got to think more broadly. You've got to think about those independents and the second and third order impacts when you are working through scenario analysis. I think in many situations, we think of it as a bit of a tick box exercise, where we'll just lay it out for the board or for the regulators and, create some examples as opposed to really thinking about them as a contingency planning exercise. I think the other big thing in this age of uncertainty is that organizations that have very transparent, timely escalation and challenge processes. The willingness to hear divergent points of view. And that may seem like an obvious thing, but I think in large organizations, it isn't always, sometimes some people don't want to kind of stand out or have a divergent position on something or say, well, that doesn't really make sense to me. I want to question that. And so I think organizations where there's a good, well-encouraged challenge process will do well. And I think just you got to think about it all strategically. Like it really has to be a broad strategic exercise for organizations. And so I think, having clear crisis management plans, having clear, constantly updating your plans in terms of anticipating how the environment may change. And sometimes, I like to say that, working in leadership in any kind of financial institution today takes a lot of courage. And it takes a lot of courage for a lot of different reasons. But decision making is hard and choices can be hard because there's just not the same certainty. And you need to have the courage to course correct like when you see the signs that you need to course correct. And that's not a sign of weakness. To me, that's a sign of strength. So, that's a lot of things, but fundamentally, it's where you started, Robyn, that it's about being proactive as opposed to reacting to situations. Proactive preparation, I guess, is how I would summarize it.
I love that. And while you were talking, my brain's going a mile a minute, but something else that struck me and that keeps coming to my mind when we have these conversations around AI and emerging tech is also the need to be curious and kind of maintain a level of humility, or just put the ego aside. Because to be adaptable, to be curious, you have to be willing to be like, I don't know.
Yeah.
I would like to know.
Yes. We all have to say I don't know a lot more often than we felt we needed to in the past. So
I'm going to pull an I don't know. And if I could ask you, sometimes I find in the conversations around AI, and I'm kind of diverging really quickly, but we'll jump back to the other questions. People talk about accountability, and I would love to know what you mean in relation to accountability and AI. Like, what does that actually look like in practice, and not just theoretically? Because sometimes people say accountability, and does that mean decision making? Does that mean responsibility if things go wrong? Like, what does that mean?
Yeah. So I think I think that the definition is the same when it's with AI and not with AI, in my view. The importance of it is elevated with AI. And that is that, collaboration, consultation, all those things are really important. But then I think there's accountability that's sort of two ways. There's accountability sort of up and down the organization. Where do we there's a difference between transparency and communication and who's got the expertise and the authority to make decisions. And that person may then be communicating up and they may be communicating down, but being really clear that that's where that happens. And then there's, with AI, everything crosses so many groups, right? Like it's not a silo thing anymore. It's not and part of why with AI, it's so important is because technology is fundamental to AI, but it's not a technology decision most of the time. In many cases, technology is the facilitator. Just like your CHRO, maybe the facilitator of getting to something, but the hiring decision will be made by the business leader, and the CHRO gave them all sorts of support. Very often with AI, it's a business decision, it's a strategic decision, it's other sorts of decisions. So I think across the organization, there's an important accountability element. And that often, we have to be clear about, is that a business decision or a support function decision, as opposed to the input. And then I think also up and down, because there are many strategic decisions around AI that we have to think about. when do you go to agentic? Well, what are the implications of agentic AI? What are the implications, particularly in the insurance space, around some of the biases that are going to come into play, some of the lack of transparency of how we get to solutions. And then, like, some of that accountability could go all the way up to your board of directors in terms of where do we want to be strategically positioned on these kinds of things? Because those are not tactical decisions. Those are top of the house. It may be at the executive level, depending on the organization, but being really clear who's actually making those big strategic calls, and then who's making the tactical, more technical decision making.
Thank you. Thank you. I realize I really just asked that question about accountability and AI, but that makes sense. And it's so dynamic. And that's, I think, a theme that's going to emerge in this whole conversation is like the dynamism of our industry and everything. Hard pivot. But I'd be remiss if I didn't ask about, didn't mention the housing market, so it's very hard change, but, it's an important question and I want to ask it early or somewhat early. The housing market remains an important area of focus for policymakers and industry. As institutions navigate affordability challenges, slower growth and this changing market and and market conditions, all the volatility, where do you see the most significant risks emerging with that?
Yeah, well, I think, the housing market, again, there's lots of things we can assess and analyze and measure and understand about the housing market, but it is so impacted by what's going on macroeconomically. And that's impacted by what's happening in our geopolitical environment, which almost feels like it's changing daily. So, the housing question, I think we have to be really this is where the scenario planning and the understanding what the implications are of all of these external forces. And I think if we look at Canada, we've already seen a very meaningful correction from peak pricing. Now, peak pricing, one can argue whether peak pricing, because that occurred during the COVID period where it was a whole different world, whether that's the measure you should use or whether we should use a different measure. But if you look at GTA and Greater Vancouver, we've seen, across the board, we've seen at least a 15 to 20%, 15 to 18% probably correction from the peak. More than that in condos in the main major markets. We've seen new condo project cancellations. They've become a notable feature. And then we've had this dynamic, this population growth dynamic, which is, this self-imposed dynamic, for better or worse, for all the reasons that it's existed, in that we've had a slowdown in the growth of our population, which, of course, in terms of immigration, which has had a very significant market also on our housing. We've got coming back potentially in 2027 the change to the federal immigration policy and home ownership. How will that change? We don't know yet whether that will be completely eliminated or whether that will come back with some changes to it, or some, it'll apply in this situation, but not this situation, whether it's certain types of properties. So that's another uncertainty that could help the housing market in 2027. Particularly given where the Canadian dollar is, but then that assumes the Canadian, so there's so many factors. On the household side, I think there's some challenges. We continue to have high debt relative to our income. That's grown, and it's the highest it's ever been in Canada. Up at 177 debt to disposable income ratio. So that's a high number. But then our debt to net worth ratio has improved. That's improved because of home values. So depending on where home values go, that could also impact this. The IMF, as you will know, in its 2025 assessment, did identify elevated housing leverage and impending mortgage renewals as prominent vulnerabilities. I think both the Bank of Canada and OSFI, in their assessments, have felt that there's for the most part, given a certain set of conditions, that we will withstand those renewals without significant impact to financial institutions. Of course, there will be some impacts to individuals, but I would say overall, our financial sector is well positioned. And I think, the case always is with the housing market and the impact is how quickly things happen. When it's an abrupt shift, it's much more difficult and there's much more pain to the industry. When it's a gradual shift, it's very manageable. And I think for the most part, we've been working through more gradual shifts. We have some big renewals coming up, but I think, all else being equal, because that's the challenge, right? You have to sort of sensitize to the other factors in the market and be sure that you're doing all the stress testing that you need to do, and that you be as diversified as you can be, as your organization allows you to be. And I think most financial institutions will weather this satisfactorily at the end of the day. But that's probably not the most satisfying answer, because it's an answer that says there are so many variables it's hard to know. But that's where the planning, the scenario, and really understanding inside your own organization, what if this happens? What does that mean to us? And if this happens, and so how do we position ourselves as best we can to weather any of those potential situations?
I think that's a satisfying, and that sounds like if that's a satisfying answer because it's a true one, rather, and also you said that financial institutions will likely weather it well. So good news. We'll take the glass half full. So just doubling back to, we got to keep talking about AI and technology, and it does sit at the center of a lot of these conversations we're having about risk and uncertainty. It not only does it represent like a risk category of its own, but it's also influencing other risks and emerging risks in the way. And you mentioned how it really, almost like gas on a fire, increases the spread. Can you talk about what this means for leaders and boards about how they should think about how they should managing risk in this escalating time of change?
Yeah. So I think, and I touched on this a little bit earlier, I don't think in the world of AI, that we should be thinking about decision making as technology decisions. All the decisions I believe that we should be making around AI are strategic and other business opportunity or business resilience decisions enabled by technology. So, of course, technology is at the center of it. But you can't look at it as a technology issue. I think you have to look at it as a strategic issue, a governance issue, and a resilience issue. So really, those are the buckets. And so I think there then become some key things that you have to really understand well in your organization. And every organization is going to be at a different place. And every organization is going to have a different set of strategic priorities. And that will mean AI is more or less important to you, depending on the broader picture. But where you are actively using AI or developing a plan around AI, I think you need to be sure at a very senior level that you understand your critical technology dependencies. That is really important. Many organizations have so much to outsourced. All that outsourcing is pretty much going to the same very few third-party organizations. So there are new risks that come with that. There's, of course, opportunities that come with that, but really understanding those dependencies and what it means, what a failure means to you in your organization. If something, because now you're in a situation where you have little to no control over a failure in your, and that's driving maybe very critical parts of your businesses. So that's a key thing. Ensuring that your governance frameworks are staying, keeping in pace with adoption as you're moving. Because often when we're developing new things, we're just moving forward with them, and then we're trying to catch up with our frameworks, and that's not a good thing in this space. And being concerned about concentration risk here. I think it's really important that we focus on that. And then, one of the, like sitting both on boards and just sort of working with a lot of active executives these days, I think one of the most interesting things about this space is that we have a bit of an inverted pyramid, because the people at the top are the least knowledgeable. They have the lowest level of literacy. In most other things, you grew up in an organization and you learned and you worked actively in these spaces in junior roles until you got all the way up to being either a senior executive, a CEO, or a board member. In this case, most people sitting around these tables are learning about it as an educational exercise, not as having that core fundamental understanding and knowledge. And I think that's a very interesting challenge for organizations, because now you are very dependent on other levels of your organization that have all the expertise, have all the knowledge. And so at a senior level, I think it's very important that AI literacy be elevated, and elevated not just in a, sitting in boardrooms and being told what things are, but actually learning how to use tools and technology, and having demonstrations and understanding what things mean and how they work. Because the very people that are making many of these ultimate decisions around technology are not the deepest and most knowledgeable. And so there is a risk of not understanding. And that risk runs both ways. That risk can run in being too conservative because I'm not comfortable, and therefore we don't want to move forward on things. That's a risk. The other risk is moving too fast and not understanding what you're actually taking on and what you're doing. So I think that's a really important thing that leaders and boards need to internalize. And you mentioned, Robyn, humility earlier. This is where the humility comes into play, for sure, where very senior people have to say, I don't understand. And you get things explained to you in a meeting from a very knowledgeable technical person, and you're kind of blank-faced thinking, I don't really know what that all meant. And you got to go back and be humble and say, I don't understand. You got to help me here, because it is so critical to businesses right now, both in the opportunity and the risk side, that we got to make sure that senior people actually understand what's happening. And I think, it has the potential to reshape organizations so significantly that level of literacy at a leadership level is just so critical.
It makes you think of it's practical versus theoretical. So do you have you might have the theoretical knowledge or not even, but do you have the practical knowledge? Do you know what that looks like in application?
Yeah.
So that makes so much sense to me. In regards to that sort of changing the connotation of it's not a technology decision, it's a business decision that's enabled through technology. How would you recommend institutions think about resiliency differently now than even say like 5 years ago?
Yeah. So I think the shift to resiliency is sort of it's taking all the things that we did before, taking our risk appetite, taking our operational risk, taking, like, not throwing those things out, because those things are as important as they were before. But to me, it's all about creating resiliency. And we used to just think about our own systems, our own processes, our own controls. Like, let's just have them in place. But today, resilience is like a much broader ecosystem. We have to think about third parties, technology providers, critical infrastructure dependencies. And so we are so dependent on all of these functions that it's not sufficient, first of all, to just think about our own risk. We have internal risk. We have to think about our resilience of the ecosystem, which is, we're barely there in terms of thinking about our own resilience. And when we talk about resilience, and I know, different organizations are at different stages around this, but it's not being able to, resilience is not about preventing risk, preventing issues. It can be, but then it's about when you've got to assume there will be an issue, there will be a crisis, there will be a problem, whether it's internally or externally generated. But then it's like resiliency is about how do you adapt to it? How do you respond to it? How do you recover from it? And how do you learn from it? So that's what I think resiliency is about. And we need to build that into how we operate in our organizations. And so, the simple kind of example, and I apologize because it's a banking example, but it's, we used to just think about a silo system and how long will it take for that to operate. Now the way you think about it in operational resilience is what's a critical thing that we need to make sure happens when there's a crisis. So in banking, the number one thing is, how do I get money into a customer's hands in an acceptable time frame? All the ATMs are out, everything's gone, all of these things have happened, our branches are shut down. And so it's all about all of the mechanisms from the front line to the technology. What are the systems and the processes that we have to have back up and running, and in what time frame do we have to have them back up and running? And it's in an insurance company, it may be, I have to be able to respond to a claims request, those kinds of things. What are the customer, like this? Let's start with what we have to be able to deliver, the service, and then work our way back. And then I think in this new world, some challenges that we have to think through in relation to being resilient and being able to deliver to our customers is this greater concentration risk among a very small number of technology providers. Think about when Rogers had their outage a few years ago, and all the downstream effects from that, and who was prepared and who wasn't prepared, and who had a backup plan and who had a crisis management plan, and how you effectively worked through that. That was how you worked through that. There were two parts of it. Two was how dependent are you, like how much of your business is impacted by this. But then the other piece, the piece that you can control, is how prepared were you for if that went down? What would you do? Do you have a crisis management plan that you can activate and everyone knows how to activate? In that situation, and I think this was quite public, One of the ways that, one of the contingencies that Rogers had to be able to communicate if the Rogers network went down is they had Bell SIM cards for their phones. So they would be able to use them. So if it was just Rogers if both went out, that would be, they'd have to have a different plan. But if Rogers went, Bell, and vice versa. Well, those SIM cards did not work. They hadn't been tested. It's a bit like the pandemic situation when we found out our masks were expired. That's a lack of, in both those cases, you got to have the full plan in place to have it work. So this increased exposure to third parties and supply chain disruptions is really important and really needs to be thought through. And then because of the small number of providers, single disruptions now have broader system-wide consequences than they used to in the past. So that impacts how you deal with it. So it's about the mapping of the critical dependencies. It's about ensuring that you have the stress testing, strengthening third-party oversight, which I know is so challenging, especially with some of these technology providers. One of the things that, we wrote a report on and have been pushing very hard for is that for the financial sector, that these technology providers, they're critical technology providers, be considered critical financial sector infrastructure, because we think that's really important given how the impact they now have on the financial sector. That's been done in Europe and in other markets, but it's something we think we need in Canada. And just building redundancy where practical. And I know the biggest resistance to building redundancy is the cost, especially if you're a small or medium-sized company. So you have to be really selective about how you think about where building redundancy, and when it's human capital, people having multiple functions, or when it's technology or physical infrastructure, how you manage that. But I think it's to kind of summarize, it's about how do you continue to operate. Like resiliency to me is about when, not if, but when something happens, externally or internally driven, how can we continue to operate? How can we serve our customers? And how can we keep making effective decisions in an increasingly interconnected environment? I think COVID was sort of the best test we could ever have of how to do it. I think the financial sector generally performed incredibly. So that was a really good thing. But for many organizations, there was a lot of scrambling. And so hopefully most of us have learned from that. And we are, building that into place. I know a very senior executive at one of the banks that I know well said to me in the middle of COVID, she said, "Sonia, this is so unbelievable. I did not know our organization could make decisions the way we're making decisions, how quickly we could make decisions, how we could get the right people in a room, all of those things. And I hope it lasts after COVID and that we don't revert back to the way we used to do things." And so, I think that's an important thing for organizations to reflect on. Post-COVID, did you do a bit of a post-mortem? Did you talk about how and map out how you may be operated differently and better, instead of, okay, well, that happened, now we'll go back to the way we used to do things? So if organizations haven't done that, maybe it's just, there's still an opportunity to say, how are we preparing?
It's so funny because I think COVID exposed gaps in so many frameworks, infrastructures, just across the board, all sectors, but also for individuals too. It just the way COVID made us all reflect on truly on everything and be like, where are the weak points? So I guess kind of tangential to this whole conversation about technology and AI, Canada recently released its national AI strategy, which GRI welcomed many of those elements of that strategy, but also you guys identified opportunities for our country to strengthen long-term resilience and competitiveness. What do you see as the most important priorities for Canada moving forward?
Yeah, so I did think that we did think that the AI for All strategy was a good, strong foundation. And the reason we thought that is because they emphasized safety, trust, adoption, and innovation. And I think those are critical, foundational components for the financial sector. So that I think is a great tick. I do think we were a little disappointed, and we've written about this, that the financial sector wasn't called out more specifically in terms of the important role that it can and should play, for a whole host of reasons, not the least of which, although Canada as a whole has not been the greatest adopter of AI and technology, the financial sector has been an early adopter and on a relative basis. And so I think that we can serve as a source for practical implementation. We can serve as a source around governance, consumer protection, operational risk, all of those sorts of things. But what stood out for me is that as a country and as a financial sector, we really need greater regulatory clarity and coordination across jurisdictions. Without that clarity, it's hard for individual organizations to invest and innovate and move at the pace that we should move. We also think that there need to be clearer pathways for responsible experimentation and innovation. That is not, like the world of sandboxes don't exist very well in the financial sector because the risk of that has been too great to, we're not a test and learn and, out in the real world kind of sector. And so I think with AI, we need to have clearer pathways to be able to do more of that, because that's where the innovation, that's where the experimentation will become substantive and meaningful for our organization. And I believe that although it's good, we need to continue to enhance the collaboration between government, regulators, and industry. We need to be very actively involved upfront in helping to shape decision making. And I think we need decision making that applies nationally. And then one thing that they did highlight, which I thought was really fabulous and we're a big proponent of, and that's AI literacy. Like top to bottom, we all need more true, real comprehension and practical knowledge and experience.
It's, again, correct me if I'm wrong or misunderstanding, but that's the balance of innovation. It sounds also like harmonization in some ways, it being harmonized or finding at least alignment across, but also being able to innovate. And I guess but we're almost out of time, but I have two more questions. But one of my questions is essentially then in regards to innovation and competitiveness, but you want to maintain responsible adoption. How should financial leaders think about this balance? How can they move forward with being like, well, we're going to be innovative, but we also have to be safe?
Yeah. So I think first and foremost, anything that we're like this should not, like, it's too easy to kind of think of this like as a new shiny object somewhere. Oh, let's try, so I think the most important thing for every organization is that it needs to be built on strategy. Like what are we trying to achieve? What are the objectives? And then is AI a way for us to more effectively achieve those objectives? Not here's a little AI opportunity off to the side. Let's try one of those. So, whether it's about better achieving our underwriting objectives, getting somewhere faster. So I do think that it needs to be grounded in strategy. I think we have to be, there's this, this isn't probably that helpful, but there's just this fine balance between moving too fast and moving too slow. Because if you're not doing anything, you're going to lose competitiveness. And you're just, and not just competitiveness, you're at greater risk for for the bad guys, for cyber attacks and for all these things. So you have to be moving, you have to be open, you have to be thinking about it, and you have to really be engaged in a process to move along. On the other hand, what's the most important thing we have in our business? And it's trust, right? And so trust is built on, our reputation. It's built on our, not screwing up in terms of how we deal with our customers. And so, it's a fine balance. And that's why I think, decisions and a real understanding of where the organization wants to be strategically. And therefore, once you make that decision, you can then make the tactical decisions as you move down through the organization. And so that all sounds nice and easy, but it's really difficult to do, and it takes time. But I think if you have sort of the right kind of collaborative, engaged organization, you get external expertise where you need it to just not to make decisions for you, but to help inform your ability to make those decisions. And you think about it from the perspective of how does this grow my business or protect my business, one or the other.
That perfectly brings me to my final question, which is just how can leaders, boards, organizations, how can they sustain that trust that you're talking about that is so crucial to our industry?
Yeah, I think probably the most important thing in terms of that is recognizing that we can't avoid failure here. There will be some disruption. It's unavoidable. Things will happen. And I think that the most important thing we can do here is respond to those things with transparency, communicate uncertainty honestly rather than projecting false confidence. You mentioned this right out of the gate. And that governance needs to be genuine rather than ceremonial. And I think if we approach our business that way, that will come through in our decision making. That will come through in how we communicate with our clients. I mean, that was one of the things we saw in COVID. There were some companies that were just brilliant in their communication with their clients. And the way that the reason they were brilliant is because they said what they could say. They were transparent. They projected that, that honesty. They weren't overly and I think if we just bring that every time in these situations, because there will be challenges, there will be things that go wrong. And I think we all know, even on a personal level, the frustration is when you're not communicated with, you don't understand, nobody explains, and not just that, tries to rectifies it in the most reasonable way possible. And so I think that visibility and accountability as we move forward will in and of itself be a competitive advantage, and will distinguish one company from another.
That's great. Sonia, thank you so much. I feel like we could have kept talking for hours. Honestly, this is fascinating, but we're out of time. We have 1 minute. So thank you so much for talking to me. I'll just call Keith back onto the line to say goodbye and close out the webinar, but I truly appreciate you talking with me.
Thank you, Robyn. I appreciate it.
Yeah, I just want to echo Robyn's thanks, Sonia. That was really insightful. We really appreciate your sharing your expertise with us. On behalf of our board and all of our members, thank you again. I do want to mention that our next webinar will be September 15th at 1 p.m. You should be receiving an invitation soon, and it will be on CAFII commissioned original research. So look forward to seeing many of you there at that time. In the meantime, thank you all for joining us, and have a great rest of your day. Thank you, and bye-bye.
Thank you.